Welcome to today's webinar. My name is Eugene O'Callaghan and I'm a Senior Advisor with Haven Green, and I'm delighted to be joined today by Sue-Mei Goh. Sue-Mei is a fixed income portfolio manager with Lion Global Investors based in Singapore. Lion Global is a full coverage Asian specialist, 38-year history and multi-dimensional analysis across Asian markets with $40 billion US dollars of AUM invested in fixed income. Sue-Mei herself has 29 years investment experience in Asian bonds, so we're very much looking forward to hearing her insights today and very appreciative of her sharing her experiences with us. And indeed, we do want to take an investment perspective today. This is really the purpose of today's webinar. Before we start, a reminder, the webinar will run for approximately 30 minutes. And I invite you to submit any questions you have, either using the chat function on Zoom or via email at info@havengreen.eu. Given the relatively short duration of the webinar, if we don't get to your question live, please be assured that we'll follow up all questions in the coming days. So let's get started, and welcome Sue-Mei. Maybe to start with the sort of broad hypothesis that Asian credit might be an under-recognized asset class among many investors around the world. It's something that might just have been part of a global fixed income portfolio, but they might not have had specific exposure to Asian credit. So maybe you might talk to us about what you think are the particular reasons why we should invest in Asian credit and the features and characteristics that make it a worthwhile asset class to consider.
Sure. Thank you for having me this afternoon or this morning, your time. From my travels in Europe, what I gather is most European or investors in the West tend to look at Asia as part of the emerging markets universe. And but for us, I think today I want to talk specifically about the Asian credit, which is one part of the emerging markets, but I think it's not well recognized. Here I am talking about dollar bonds issued by Asian corporates that are domiciled in Asia, and they generally have a certain credit quality that is, from where we sit, it's comparable in some cases to developed markets credit. I want to make a distinction here between Asian bonds in local currency terms, which are generally more, I guess, investor in Europe probably think about emerging markets when they look at the value proposition. But here I want to focus more on the dollar bonds that are issued by Asian credit. First of all, I think it's interesting right now at this point of the cycle, given that dollar rates, we all know, have peaked, and the repricing as a result of the 2 years of hike by the US Fed has brought levels now to very attractive levels, even for coupon accrual. So it's definitely a time to take a look at this issuance by Asian credits done in the dollar space. Now, when people think about Asia, they think of Asia as a bloc, but Asia is actually a very diverse market. There are 20 over countries in Asia. The index that we track alone has 16 countries, and the countries here are very varied. You have really frontier countries like Pakistan and Bangladesh, and you actually have things somewhere in the middle like Indonesia, Philippines, or even Vietnam. And then you have those that are really developed in terms of the infrastructure for investing, like Korea and Japan. So within Asia, it's a very varied field. And because of that varied field, it does provide quite a good flavor for if you're looking to diversify the risks. And we have done studies that shown that in terms of volatility, in times when the market is trying to run away from risk, actually Asian credit hold up a lot better. So in terms of risk-adjusted it's less volatile. So if you look at historical trends, the returns actually over time does provide very good diversification, especially for people in developed markets looking to diversify away from just US and Europe.
So, in the context of risk, which is obviously, you know, particularly important for fixed income investors, what's your sort of comments on the level of credit losses or major downgrades, which would be, you know, a big concern of a global investor going into a market they're not aware of, that they might end up essentially losing a lot of their money?
Actually, at this point, for those who follow the story, you have known that in the last 2 years, there's been quite a major drawdown in terms of what's happening in China. And a lot of the high yield issuance, particularly in the Chinese property sector, have gone into distress and defaulted. But as a result of that, there's been quite a bit of a cleaning up of the space. So at this point, actually, what we see as remaining in the marketplace in terms of Asian credits are all pretty clean. If you look at the financial ratios coming through in terms of leverage, in terms of cash flow generation, in terms of financial ratios, Asian credits are actually in a very good place, quite stable. And in terms of downgrades, rating downgrades, actually the rating downgrades that have happened have all happened more in terms of Chinese credits, very few in any other parts of Asia. And going forward, we do expect things to turn better rather than to worsen. That's why at this point, in terms of valuation, it's actually very attractive.
Okay. And the underlying metrics around leverage and cash flow generation are all generally across the sort of 16 or 20 markets you're looking at, except maybe for China real estate, but everything else you think is in pretty strong shape at the moment. Is that a fair summary?
Those who have issued or are able to come to the dollar market all tend to be the best in class in terms of the markets that they operate in. And if you look at the macro numbers that are generated of course, I'm talking about on an average basis. Within that average, there will be good guys and there will be bad guys. So the important thing is to be able to distinguish between these, and then also to be able to make value judgment in terms of how you should be compensated in terms of the risk.
Okay. So maybe to take a step back, Su Mei, and think about Asian credit from a more macro perspective. A lot of investors will be thinking about there are, you know, geopolitical tensions globally, and in particular, economically, deglobalization and reshoring is beginning to happen. You know, what is your take on the outlook for Asian credit over, say, the medium term, given those long-term, the trend that's developing in those long-term macro type of areas?
Okay, the obvious problem area last 2 years has been what happened in China. I think we can discuss a little bit more of that later if you wish. But as a result of the political tensions that's happening between US and China, actually, to be very honest and blunt, the rest of Asia have, in a way, benefited. This diversifying away from China has actually benefited countries like India, Vietnam, in quite a big way in terms of their manufacturing base. And so what we see is a lot of the countries that have some corporates within the manufacturing area now have better business. They have better way of generating cash flow, and they actually has the promise to become bigger and stronger, and could potentially be an issuer in our space going forward. This last 2 years alone, we have seen quite a lot of Korean corporates coming to the market. These are first-time issuers. Korean corporates previously tend to be more on the quasi-sovereign kind of corporates, companies that have some backing from the government or banks. But we have seen semiconductor producers coming to the market, chemical companies coming to the market, and these are first-time issuers, or they are rare issuers that have come to the market. It's likewise the same in from Japan. So while we recognize that the political tension is there and probably will always be there, at the ground, at the corporate level, life has to go on, and generally, in a way, they trudge along and they have produced quite good results despite these macro headwinds that you see.
Yeah. So I think you're saying that for Asia in general, there's a big opportunity, and there are corporates in new sectors or new corporates in varying sectors emerging. But maybe just to specifically ask you then about China, which I appreciate is just one part of the benchmark you're managing against. Is China investing in Chinese corporate credit an opportunity, or is it a risk that is too high to really for a global investor to take on? Where would you see that at the moment?
Right now, I think in terms of China, you have to be able to distinguish between the good ones and the bad ones, which means looking at the fundamentals, the credit fundamentals of the company is critical. It used to be, because China was in such a high growth phase, there was a little bit of an indiscriminate buying, a little bit of a moral hazard problem, which has transpired. But right now, after the sort of a cleaning of the markets in the last 2 years, the ones that are still standing, or the ones that are still good in the marketplace, all tend to be the stronger players. Broadly speaking, there are probably three or four categories. The Chinese property, very few are still standing, but those who are standing tend to have state backings, and you have to be very careful, but I think there are certain opportunities there. The other category are the local financing vehicles. Now, those are a little bit, from where we stand, transparency can be a bit more of an issue. And this, I think, LGI as a house would prefer to sort of keep away at this point. We have state-owned enterprises that have always been issuing, and they are still the people, the backbone of the market, so to speak. And there are selected POEs, private enterprises, in certain selected sectors that have good cash flow generation, good market power back home. Those we would still be looking at them. So what I guess I'm trying to say is that you have to be able to discriminate between what is good and what is not good, and not just spread all across. Here's where I think LGI has a bit of an advantage, because we have been watching these for a long time, and we are closer to the ground maybe, and we have been following the history of the market. So I think our perspective is that we don't belong to the category where we think China is a no-go. We just feel that you have to be careful about what kind of exposure you go in with.
Okay. So more widely then in your portfolios, maybe could you, for the benefit of the audience, speak to one or two of the securities that you're currently invested in, just to give a flavor for the types of bonds and types of issuers, and the attractions and the risks that you think about across a couple of positions in your portfolio, just to give some color.
Okay, so like today we have Indonesia coming out to do a sukuk issue. Indonesian sovereign issues are sort of like the plain vanilla stuff in this market. If you're an index follower, you probably would take a small bite of it, but valuation right now, I would not say it's particularly attractive. What then would be more interesting to me at this point would be some of the financial issuers. If you are willing to go down the capital structure a little bit in terms of looking at the tier 2 issuance, you could find some good value. A recent issuance would be Bank of East Asia. A recent it came to market recently. It's a Hong Kong bank, and it's trading currently a little bit wider than generally speaking, because it does have a book that has a bit higher exposure to property sector in China, but it's been very prudent in taking provisions on those. And if you look at the capital ratios, it is in a very healthy position. So we like things like that because the general sentiment towards the sector is not great. And because of that, it's giving us a good, slightly better levels than what the general market would be. And because we look at the fundamental of the credit pretty closely, we are very comfortable with taking that risk. So at Lion, that's what we generally do.
And what do you think then in that example, what might go wrong? What would bother you? You know, what would worry you? What might concern you when you're holding that position?
You obviously would be looking at what is the biggest risk factor for that. And currently market is still about the bank, the exposure to the property sector in China. So we would be monitoring the loss provisions, the way it manages its book going forward. But having said that, we have been following this name for the last 5 to 10 years. We have access to the company in terms of questions should we need to ask. So, yeah.
Okay. And maybe another example, that's a great one. Maybe just one more example of a portfolio position that you might talk to the audience about.
Okay, maybe away from the financial sector, say let's take the problem area, Chinese property. There are companies that are completely in distressed land, which I wouldn't touch even if it's 2 cents to the dollar. But there is one company which is a sort of a SOE. I don't want to name it because I don't want to, frankly, spoil my own position. But it's an SOE with a limited number of issuance in the market. And we've been monitoring the sales as well as how it's managing its cash flow. It's been able to issue quite strongly in the local Chinese markets, in being able to raise funds locally. So the bonds right now, there's a 29 that's trading in the 70s to low 80s, which potentially it's 10 to 12%. And I think it's if you monitor it closely enough and you are nimble and take a small bite, it's probably an interesting opportunity at this point.
Okay. And maybe more generally in your portfolio, you mentioned, you know, Korean companies before. India is a huge economy. Are there any examples of bonds that you hold there? Just again to give a flavor for, you know, the breadth of Asian credit to the audience.
Korean companies, there are a few asset management companies that do trade wider than the general Korean companies. Those we are quite happy with. Korean also, you have the tier 2s for the banks, which do give you a little bit of a spread pickup. In terms of Indian companies, essentially you can break them up into SOEs, state-owned enterprises, private enterprises. There are a few that are favorites in the market, things like the telcos that could be interesting. And then in the high yield space in India, you do have quite a few renewable energy companies. This, I think, when you look at them, you have to be able to tell because there is so many issuers coming, supply could potentially be an issue. So it's better to stick then with the stronger guys like Greenko Energy, for example.
Okay. So moving on, Haven Green as a firm is very focused on sustainability and ESG, and maybe you could explain from Lion Global's perspective how you think about environmental, social, and governance factors in your credit research process, and if there are any examples of how that translates into portfolio decisions.
In terms of ESG, we do subscribe to MSCI in terms of its rating for companies. So that is where we first start. But Asian space in terms of coverage is not as well covered by MSCI. So we do have instances where it's not rated. What we have done is adopt a methodology or a process by which our analysts will engage the company directly in terms of the ESG factors. I think the MSCI methodology has come clear guidelines on which sector, if you belong to a particular sector, there are certain factors that you will focus on, things like whether it's environment or corporate governance or, you know, factors like that. So our analysts will take a look at which sector the company belongs to, what are the main factors according to MSCI methodology, and then try to engage the companies to see that over a 3-year period, they are on an improving trend. And if they can prove to us they are on an improving trend, then we would continue to stay engaged with the companies. Otherwise, after 3 years, if they show that they have not improved, then we would unfortunately have to drop them. We feel that that is the best way that we can do at this point. But again, it's a process that we are still fine-tuning. In fact, because quite a few companies are not rated, we do have quite a bit of work for our analysts on this. And actually this morning, just before the meeting, I was just exploring with them on how to use ChatGPT to cull through the voluminous amount of research that you will need to read in order to sieve out the few main salient points to engage a company with. And I'm happy to say, you know, we sort of like, thanks to these new technologies, there's a more efficient way of doing it. So we do take our ESG process very seriously. But I must admit, you know, sitting in Asia, we are a little bit, well, a step or two behind Europe. But I think we are catching up.
Yeah, I love the idea of using ChatGPT to help you with the research
process. It's just so much faster, right?
No, I can imagine. Yeah. And just the last question on that then, you know, how would you sort of characterize the general quality of Asian companies in relation to ESG compared to European or large American or European companies, for example? And maybe it's not as well developed, but are the weaknesses matters of fundamental concern, or do you think in general Asian companies are on the right path and they're just a few years behind on the same journey in a sense?
I think it's the way you characterize is probably just right. My own understanding is that Europe is very serious about ESG and it has gone quite a long way. The Americans may be a little bit behind, it's not the right word, but they may be taking 3 steps forward and 2 steps back. Asia, we tend to be, it's a very disparate, a very wide range of economies here, different parts of the cycle. I think the developed part of Asia is taking ESG very seriously. Singapore, for example, our government is a top-down in a way. We are very serious. We have some targets that we are going to meet. And generally, the companies are trying their best to meet those targets in a very deliberate way.
Okay.
I think it depends on the country, but I think in general, we are heading in the right direction.
thank you so much, Sumay, for your insights and your helping us on the journey through understanding a little bit better the world of Asian credit. A reminder to our audience again, if you have any further queries, email them to info@havengreen.eu, and we will respond to them in the next day or so. And on that basis, I'd like to close the webinar. Thank everybody for watching. Hope you got some value from it, and we'll see you next time. Thank you.
Thank you.